Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with our euro currency analysis. So you can see market yesterday has continued upward action, showing another session to the upside. That is actually what we would like to see, because yesterday, if you remember, I said that one thing I still missed here is just I would be happy if we will get the bullish reversal swing on the intraday charts. And yesterday the market has formed this swing, and currently it's come to most important vital moment of the deep retracement. That will clarify everything. So if market will be able to hold above this retracement level, major fib level, in this case we will keep chances on upward continuation. If not, if market will start dropping back to the lows, well, theoretically we also will keep an eye on the possible double bottom here. So it still will be last chance for the bulls, because it's most the patient with the deepest possible retracement in the market returns back to the lows and still keep chance on upward action. But in general, it would be better if market will show some acceptable retracement to the major support area and then turns up again. So currently, guys, it's absolute madness stands on the stock markets. Yesterday we talked about it, if you remember, and discussed the double repo patterns on all European indexes. And then take a look what has happened. Though yesterday has dropped for the 3%, so you can see this absolute collapse on the Dow, on the 800 points with the 2 sessions. On the Euro stocks, this was just tremendous collapse based on double repo. Actually, it already has hit the minor target, but after such a collapse, you understand that you could expect more. The same you have on the DAX index. So its DAX also collapsed here. So correspondingly, euro currency has moved a bit higher, not at the same degree, but it confirms the existed relationship between the stock market and the national currency. So on intraday charts on the euro, currently the first upside leg is done. So you can see market has formed the kind of the ABCD pattern, and now it hits the confidence resistance on the 4-hour time frame chart, 109.68 area approximately. So today we expect starting of the deeper retracement, because in general market was standing in a downside trend for a long time, and bearish momentum still exists in the market. And in general, usually when the market forms bullish reversal swing, it shows deeper retracement. So currently today we will keep an eye on this retracement. Besides, today it will be some kind of the maybe preparation or something for coming non-farm payrolls release, because currently traders really worry about this. Yesterday's collapse was happened partially by the really poor ISM numbers. So actually they have dropped to the 10-year low, and it shows the numbers below the 50 points level, which is actually a separate line between the growth of the economy and recession of the economy. And it was significantly below the expectation, and it shows numbers below the 50 points. That was really negative surprise for the market, but not only in the United States, but in Europe, the same story. So the European ISM index shows the slowdown in the economy for the second month, and it's also a negative moment for stocks. So that's why investors currently is a bit frustrating and just gambling what to expect next, because it's a lot of uncertainty with the European Central Bank policy, with the Fed policy. Statistics starts to release mixed, some political turmoil in the United States. Nobody knows what will happen with this. Either the impeachment calls, some really domestic turmoil stands right now in the political life of the United States, and that brings uncertainty on the markets. Market investors starts to become nervous, and as market come closer to the end of the financial year in November, everybody tries to protect their profits on this year, because So you understand the stock markets have risen for 22%. This outstanding rally. That's all the stuff pressed on the market, of course. So still on the euro, as you can see, as we said, market hits major resistance. Now we are watching for a pullback. On the hourly chart, that is the ABCD pattern the market has completed. Not right from this point, but when the point where acceleration has started. ABCD is down. You can see this drop starting. And that's what I'm talking about. So if you remember, yesterday we said, well, I would be happy if market will form the bullish reversal swing and then starts retracement down. So if you have taken position yesterday, well, that's great. So, see, this was a successful trade. That was also, by the way, the 618 support. And that, you can see that here this upward swing is greater than the previous swing down. That calls as a bullish reversal swing. Usually after the bullish reversal swing, market shows deep retracement. And currently we are watching for two levels. First one is a confidence, 109.30. Next one is 109.11. From the perspective of the some kind of the hand and shoulders pattern, the more probable to hit is 109, 109.11 area. Simultaneously, that will be the crucial level for euro currency. So it would be perfect if market will hold here and reestablish upward rally right from this point. If not, that could lead either to breakout of these lows and downward drop soon, or, as I said, we also will keep an eye on another bullish reversal pattern. The last one that is possible is a kind of the double bottom in the same area, because in general the patterns that we have here is rather strong, lots of extensions, so this level deserves more reaction from the market. So if we even wouldn't get this upward rally right to this area, at least in the shorter term we deserve here some extended pattern and at least some retracement to the 618 area, maybe of this most recent swing. That's just minor pullback that is theoretically could happen in this situation. That's what we will keep an eye on. But first, we need to wait until the market will hit major levels, and we need to see what reaction will be on the market on these levels.